Can we cut across to the IRB management and hear out what they have to say? Yes, in fact, analysts are now saying that IRB's new strategy of bidding for hybrid national highway assets to rebuild its backlog has now paid off, and from now on, things are going to improve meaningfully. Here's Virendra D. Maiskar, the chairman and MD at IRB, discussing the Q4 results and the road ahead with my colleague Ajay Sharma.
Almost 1,20,000 crores worth of projects were awarded in the last, in this fourth quarter by the Road Ministry, and we are happy to state that we were able to bag a considerable pie of that. Almost 9,000 crores worth of orders were picked up by IRB, comprising of BOT and hybrid annuity projects. So I think it was a very satisfying quarter that has gone by.
Yeah, exactly. Because NHI was also kind of running a little short on their own targets, so everything got bunched up.
Yes.
So talk to us about how traffic growth was this quarter and what's the outlook overall?
So traffic growth again was a very satisfying one because the first half of this year was a bit more challenging as the GST and the demon leftover impact was playing out and the traffic was very soft. But whether it was our InvIT portfolio or whether it is the IRB portfolio, I think whatever we had guided for as a whole year target, we are very happy to state that we have more or less reached those numbers in spite of a challenging first half. So almost 6 to 7% volume growth was witnessed across most projects, and that traction continues to be playing out even now.
So your blended margin on average were 49 odd percent, this time 49.2 to be precise. If you could break it down to understand how the segmental side went.
So as we have always stated, we have two verticals. One is the BOT revenue and the second one is the EPC side. So EPC works on a usual EBITDA margins of around 28-29%, whereas the BOT business works at an 85% EBITDA margin. So as the mix changes, the resultant EBITDA margin on a consol basis changes. So this time, because the BOT revenues have picked up because of the 3 Rajasthan projects coming in, the EBITDA margins have been okay, but the construction has also picked up, which is a low EBITDA business, resulting into a 49. So I think the right way to look at would be to look at the individual vertical and see if the EBITDA margins have improved or not. So as far as the construction piece is concerned, we have retained our EBITDA margins, and so has the margins on the BOT side been maintained at around 85-86%.
So what's the outlook from here on? Are you going, the play is looking more like margin will be maintained at current level in both segments and volume will happen and hence the benefit will come, or you think scope of margin improvement as well?
Okay, so I think that in the next 2 years, as we implement the HAM projects as well, the HAM projects will be a lower EBITDA margin projects because there is not much of funding element involved in that as we have on the BOT side, where we have to have a larger interest burden because the bank disbursements come every once quarter. Whereas in the hybrid annuity, what happens is we actually work with a positive cash flow with NHI starting to pay the mobilization advance. So you don't have a negative cash flow cycle there, and as a result, the EBITDA margins would be very close to the PBT. So the PAT margins will certainly be retained at 10-11%. But the EBITDA here in case of hybrid annuity will be lower. So as a mix of hybrid annuity projects plus EPC together, we look forward to a little softer EBITDA margins on the construction piece, but very confident of retaining the PAT margins.
So sitting here right now, the way you participated quite aggressively in the bidding round, which all got bunched up in one quarter, if I were to ask you about the kind of the mix, the segment mix you would like to have across your portfolio, far out, say 4 to 6 quarters far out, what would that be, and how do you see that shape the company?
I think having the ability to undertake all the different facets of the infra play in roads, like that is construction, operation maintenance and tolling. We have been agile enough to rise to the occasion, whether it is a hybrid annuity project coming up for bidding, or it is a TOT, or it is a usual BOT projects, and we have bid across the spectrum, and that's what we will continue to do going forward as well. I think the present focus of the government is to do more of hybrid annuity projects and less of BOT, because government believes that there is not much private capital chasing BOT projects. So as the mix continues to be rolled out by the government, we will be there to bid on all the different facets of it.
So, just a little shifting away, but staying with the sector, You are the premium company as far as the highway road construction in India is concerned. There are other players which have come up in the 5-7 years but couldn't handle their portfolios and hence are on the block. Do you see value for you as a company to perhaps consider picking some of them?
I think if we look back, we have over the last 10 years, we are completing 10 years of listing this year, and successfully tided over various interest rate cycles, various peripheral issues, various challenges pertaining to execution, and I can confidently say that we have all along been able to create value for our stakeholders.